Now they're talking about automobiles. They're talking about including possibly the European Union. So we've already imposed tariffs on Canada, on Mexico, on China. Now we are stretching the magnitude of what is going to have a import tax levied on them, because that's what a tariff is a tax.
June COMEX gold futures hitting a new all-time high as well of $31.62 an ounce, and silver is also pressing multi-year highs near $35. Now, adding to this, Goldman Sachs is saying there's a chance gold can surpass $4,500 an ounce within the next 12 months if we continue to see these extreme market conditions. With safe haven investment demand rising, ETF inflows surging, and new tariffs set to hit this week, the technicals are front and center.
Great to be here. It's been a while, but this is an exciting day to record a show. No doubt we are making history as we speak. It's been phenomenal. When you said we had year-to-date 19%, 10% of that's this month.
Yeah.
Gold has accelerated in terms of the pace and the magnitudes of the price move. Exceptional performance. Yeah. At the same time, we've got a new administration who is implementing import tariffs, and every country that we have designated these levies on has decided to be reciprocal. In other words, give something back. So what is happening is, eventually, or possibly on a near global basis, costs are going up. What is the definition of inflation? Is higher cost for goods. And so as long as these tariffs remain, and as long as Trump adds items and countries, there's, April 2nd is supposed to be an important date. Now they're talking about automobiles. They're talking about including possibly the European Union. So we've already imposed tariffs on Canada, on Mexico, on China. Now we are stretching the magnitude of what is going to have a import tax levied on them, because that's what a tariff is a tax. And so there were some numbers out in terms of how much that could raise the cost of a car, for example, in the United States. And it's in the thousands of dollars, or numbers are all over. But the fact is, if he imposes tariffs on automobiles into this country, that is going to present a problem for foreign manufacturers that import and sell their cars here. So as long as inflation continues to at least not dissipate, but tick up, as long as that uncertainty factor continues to, like a spring, ratchet itself tighter and tighter.
We got to talk a little bit about the projection here in terms of what you're looking at for your long-term outlook, because we've heard from other analysts. I mean, some are pointing at $3,150, $3,200 zone is almost exhaustion territory. Do you see any sign of buyer fatigue? I mean, the momentum still seems intact. What are your thoughts? Where are we going to be going here over the next couple of months?
Well, if the question is, so for example, are we looking, let me get a study up. Are we looking at a market that is oversold? And to illustrate that point, let me remove this one. I'm going to put up what's called a stochastic oscillator. For those unfamiliar with this technical study, in essence, it looks at price highs that are in the market now and compares it to the highest high over a period of time. So it's averaging how the highs on a particular trading day match up with recent highs. And when you get above 80, which is this delineation from a light blue into like a yellow, that's considered oversold at about 80. And you can see that it stayed oversold. It dipped a little bit, but it never went to a point where it was overbought, It never went to a point in which it had the ability to move down to an area where we could consider it oversold. Gold has been sitting in an overbought scenario, but continues to move higher, which tells me that the momentum is so great that even though technically, is it overbought? Yes. Do we expect it to go higher? Yes. Well, shouldn't it exhaust? Possibly. But the key is this is not driven by fundamentals. This is driven by how market participants view the level of uncertainty, whether it's geopolitical or economic, and that's on a global basis. Mm-hmm. And so we have that perfect storm scenario in which there's things that have been going on for years, new issues creeping into the market. Collectively, they have put a fire under the price of gold, so to speak, really causing it to move parabolic this year so far. 19% would be a great return on any stock over the year, but to get that in the first quarter of 2025 is more than impressive. It bodes to how needed the safe haven aspect of gold is needed.
Yeah.
It's a critical component to protect one's portfolio in times of uncertainty. And at least what the market is saying is, yeah, there is uncertainty and it continues to grow. And that's the key. So yes, right. We are overbought. Yes, I believe it's moving higher.
I got to ask you a little bit, I mean, we discussed the macro themes that we're seeing here, but what happens after April 2nd and the tariff announcement? Hypothetically here, I mean, what's the long-term effect on gold here?
The longer this economic scenario stays embedded in the global environment, the more harm and damage it can cause economies worldwide. The bottom line is that if prices continue to rise, and we all know that especially in a circumstance like this, labor or wages are not going to keep up with the increase in prices. I was watching the news the other day, and they made a comment about the fact that automobiles could be taxed and it could cost thousands of dollars. And the punchline was, and people were worried about the price of eggs. Right. I mean, these are real necessary staples of life is transportation. And if those prices go dramatically, it changes the way people make their buying decisions. They might hold on to a car a little longer. They might decide to get a different level, rather than the full leather seats and all that, because they're going to need to drive. And if their car is cycled through to a point where it's time for a replacement, they might consider an alternative. The bottom line is, as prices go up, for the vast majority of global citizens, it affects their spending. The ultra wealthy aren't concerned, and those in the lower income brackets don't have the capital to really, they're forced not to have that choice because the prices have become unacceptable to them for them even to move forward with something like that.